Fiverr has been on the run in 2020, and today I want to share my pre-earnings report for Q3 2020. They're sitting at 150. Will they be going up to 180, or will they drop to $120 per share? A 20% upside, a 20% downside. Stick with me on this video and I will show you my research to help you make the decision on when to buy Fiverr, why you should buy Fiverr. Welcome back to Family Investment. My name is Alex Ko. I am also known as Mr. Fiverr on YouTube because I called out for Fiverr buy at $25 per share, and now Fiverr has gone up 5x, 6x in 2020. So now we're sitting in the Q3 2020 earnings, a few days away from the earnings coming out, and this is going to be a big one. So today I'll be showing you 6 key areas on this timeline here. So I highly recommend you to stick throughout this whole video so they can help you make a decision on what you should be doing. And I will be sharing on my final thoughts on what I will be doing. And then hopefully we all both, or you and me watching, will get rich from Fiverr, because I am very bullish about Fiverr and also the freelance economy, which is changing right in front of us in the year 2020 and then going forward for the next decade. So before I start my presentation, this video is sponsored by StockCard.io. We have a partnership with StockCard.io, and I've been using the VIP premium account throughout all my analysis on my research on my YouTube channels that I'm sharing with you. So click on the link below if you're interested in signing up to help you gain more upper hand with this great investment tool. So let's begin with the first topic, the updates. What's happened with Fiverr for the last quarter? So the quality is growing week by week. Fiverr in 2019 and Fiverr in 2020 is a completely different business. But in 2020, they have moved into more business realm. Sellers are coming in with higher quality content. Some sellers are even creating their own agencies because of the great amount of work, so that they can supply services to many different people. Now, small, medium businesses are using Fiverr, and also larger corporations like Google, Facebook, and Amazon are also starting to offload to work to Fiverr. Very, very surprised that it's changed so quickly. Fiverr also came up with a new product which is called Fiverr Business, which is still free, by the way, and they're charged about $150 a year as a subscription, and then you start using the platform. So Fiverr's Business is there to kill Upwork. Is that going to happen? But then I'm taking a step back, thinking that the freelance economy is so big, there's room for 2 huge players here. And this new news that's appeared in this month is Fiverr senior notes are issued to private investors. So private investors can invest in Fiverr issuing senior notes, which is basically short-term loan over the course of 3 to 5 years. So that in 2023, they're allowed to redeem 130% of their value in 2023 on the 5th of November. And that means that is about $213 per share. So Fiverr expecting by 2030, they should be worth more than $213 per share to attract investors coming. So what is there to expect from this earnings? I'm expecting a revenue growth of about 90 million. I want to see them at 200% revenue growth and 90 million. It sounds really ambitious. Why am I saying that? Because at the point when they hit $150 to $180 per share, that is what the value should be. That is what the sales revenue should be, or else this share shouldn't rocket up so high. If they're doing so well as they state in the last 3 months, they need to show me the EPS of 0.2. to justify the value of the share they're standing on just now. And then there's this information that they cheekily shared back in early October. It's Fiverr Small Business Needs Index. And they've got this really key data for the freelance economy, not just in America, but in global, worldwide. Let's look at the global data. Drop shipping is one of the biggest business that's changed in the last 6 months. So small companies, small shops are closing, but they're moving to online and they're going drop shipping. Shopify promotion has increased by 247%. YouTube editing has increased by 231%. So content creation, makeup artists, Facebook promotion has all increased because everything is going online. And if you see below, Australia, Brazil, France have gone triple digit. 175, 299, 223 in different areas of growth. Germany has grown, Italy, Israel, Look at Mexico, 312% on TikTok promotion. There are loads of content creation from Mexico. Netherlands, 200 video Facebook promotion. Portugal, 99%. That's why I'm really bullish when I read this small index business, and I'm so looking forward to the earnings to tell me more. I'm really thirsting to know more what Fiverr will be sharing with us. So now, next one on the fundamental growth. I always start using stockcut.io. Okay, on stockcut.io, Fiverr is known to be a high growth potential. Even at the rate of $158 per share, there's still a high growth potential because of the historical last few quarters. And if they do break the EPS again, it will just showcase what Fiverr and the economy is doing. And calm sentiment investors. So as you can see, chop money inflow is going up. So people have been taking profit. Honest fact, people have been taking profit. From 180 to 150, people are just worried. Not enough data, so people are taking profit off Fiverr, keeping it aside and see what happens. And short interest is starting to come yellow. The earnings, people are taking profit, which is absolutely normal. People want to see more data. At the point where we are, we don't have enough data to work out how to forecast the next step forward. The next segment, everybody's favorite, my interpretation of Graham's intrinsic calculated value. So at the moment, they're worth about $150, $158 per share. Okay, to sustain that valuation, the EPS needs to be 0.2 and a total of 0.3 to justify the value, and a growth potential of 200%. That's a lot. So they need to be even better than last quarter, or break it beyond. They need to have a substantial aggressive growth to hold that $150 value per share. End of the day, I'm being honest, Fiverr is overvalued. They have got potential, but if you look at the next quarter and 2021, early 2021, $150 per share, it's already priced in. They're already priced in up to Q1 next year total. So we're already pricing the whole year for 2020 and also quarter 21. So this is what you're paying for. I want you all to know the risk reward of what you're paying for. That's why we do investment. We are actually already prepaying for future price. We are prepaying to see more organic, substantial, explosive growth. Now to the next one, the buy trigger, everybody's favorite technical indicator chart. So as you can see, we started from the high of 184. That's when it went as high about 2 weeks ago. So you can see a really strong support line at 153. That will be my first buy. So 150, 153 will be my first buy. That will be the first sign of, oops, it's time to buy. It's time to buy in technically. But then if the earning goes really bad, they might miss the earning. Let's say they don't hit what they were expecting, 5. So 135 will be my second buy trigger point. But if the earnings go really dramatic, I don't know what could have been missed, maybe overspending at a certain sector that we do not know about and it affects gross margin, then that might drop to 120. So my first 3 buy will be 153, 135 and then 120. I know you're asking the question, but what if they break all earnings? What if the sales revenues explode to beyond? Then we should be watching out for, and I think if that goes ahead, it should the future forecast should look really good, that it should head back to 182. It should bounce back to 182. That's the ceiling floor that's sitting, and then we should go towards 200. So for the last part, what are my final thoughts? What is my action? What will I do? I know you're all interested in my views as well. I think they will meet close to the expectation. Okay, if they don't break, because it's quite a high expectation, they'll make profit, they'll meet close expectation. If the numbers are growing as per the infographics, then the future is bright, okay? We're investing in long term, okay? We don't expect one quarter to determine the price value. We are actually investing in the next quarter, the next 3, the next 4, the next 16 quarter, and the next 4 years, okay? But this is a huge momentum stepping stone for me. For me, personally, I will be buying before the earnings if they hit 150. Because I want to secure the 150 jump, that 20% rise. I want to capture that reward. Because at 150, if worst case, if they do to 120, it's a risk of 20%. So I'm standing in a dilemma where should I capture that reward of 120 or should I wait for it to drop? But then again, nobody's got a crystal ball. I don't sit in Fiverr's director's board to know these details. So 150, I'll be buying more in just to secure my upside. And also to appreciate that I have a fall downside to about another 20%. So I'm sitting right in the middle. So before I go, I would appreciate if you viewers could like and subscribe on my channel. If you're one of those viewers who have spotted me back in 2019 and made lots of money, please, I'll appreciate that if you could share it with your social media online, on your Facebook or on your Twitter, on your LinkedIn, to help me grow this channel, to help me so that I can get this content out every single week, every single month, every single quarter, because I really enjoy working on this. So thank you very much everyone for watching. Hope to see you on the earnings of Fiverr really soon. See you.